Welcome to Gracefully Greying. I am your host, attorney Henry Gorbien. Today on Gracefully Greying, I am pleased to welcome as my guest, mortgage expert David Blatt, as we discuss an important topic for those of us who are aging, that of reverse mortgages. David, welcome.
Welcome, Henry. Thank you so much for the opportunity.
First of all, tell us about what types of mortgages you deal with in addition to reverse mortgages.
Well, our company, I have reverse mortgages of Michigan, but I also with K Financial in West Bloomfield. And we are a full-service lender. In other words, we do everything the bank does, conventional, all government loans, FHA, VA loans, non-QM loans, which are mortgages that the government, Fannie Mae and Freddie Mac, do not buy. And we also do, of course, jumbo loans. The other thing I would say that is popular now is investment property, people buying investment homes, second homes. So basically the whole gamut of the mortgage industry.
David, what is a reverse mortgage for those of us who are not familiar with them?
Well, a reverse mortgage simply is just a loan against your house. When I say a regular mortgage, I'm going to refer to that as the forward mortgage, one that you continually pay down that people are used to and most people are buying or use when they buy a house instead of paying for cash. A reverse mortgage is just a loan, and it's for older individuals, 62 and over. The spouse and the both people need to be 62 and over.
Okay, I wanted to talk about it.
If one of the spouses is not 62 and over, it's okay. We can still do it. We call it a non-borrowing spouse, and we, though, work with her age, which may give the mortgage a little less. Size of the mortgage will be smaller. So that's basically it. The other main thing about a reverse mortgage is the payments are optional. You do not have to make payments on a reverse. You can pay it off anytime you want to with no prepayment penalty. But again, most people that take out a reverse do not make any payments until the house is sold.
Curious then, with a regular mortgage, you owe money. Let's say it's a $100,000 mortgage. Every month you get a statement, and every month you are paying it down, both principal and interest. In a reverse mortgage, there's principal and interest, am I correct? And you get a monthly statement.
Correct. You will get a monthly statement, and it's also from a bank, but you're going to see the interest accruing every month if you don't make a payment. And most of the loans we do are government loans that have FHA insurance, and there's also would be a yearly or a monthly FHA insurance charge additionally to the interest. And that insurance basically is there to protect the homeowner and the bank, so which makes it a non-recourse loan. And I can explain that a little later as we get into it, if you'd like.
David, what are some of the primary reasons for someone to obtain a reverse mortgage?
The number one reason for a long time has been to stop the mortgage payment on the homeowner. In other words, if they're making a payment of $500 to $1,000 a month, that mortgage payment will be paid off with a new reverse mortgage. So that $500 or $1,000 a month will increase their cash flow. They'll eliminate that payment for them because, again, you don't have to make a payment on a reverse mortgage. So that's a very positive thing. The other thing would be maybe consolidate credit cards or to take out money to pay insurance. Could be life insurance, long-term care insurance, or just increase their financial, wherewithal. It's a retirement tool. It could be also.
What are the financial requirements for reverse mortgage? I know you have to have equity. I know it's a certain percentage. So why don't you clarify some of those issues for our viewers?
Well, yes, on equity, you typically need at least 50% equity. As the individual gets becomes older, we can give them a higher mortgage amount because of just basically their life expectancy. But the number one thing is financial assessment, Henry. We want to make sure that the homeowner can maintain their house, maintain the maintenance, pay the property taxes and insurance. So that's really important. You don't want to give anyone a mortgage that we feel is going to hurt them and put them in jeopardy of losing their home.
So the property taxes, often a conventional mortgage will have sometimes insurance and property taxes rolled into the mortgage. That would not be done with a reverse mortgage, would it?
We do that in certain cases. Primarily, the only reason why we would escrow for taxes would be for an individual who is delinquent on property taxes when we take the application, or delinquent on their mortgage payments. Even though there's no credit score, again, we're very concerned that we don't want to hurt the family or individual. So in those cases, we will escrow, but they have to have sufficient equity in the house to escrow. And Henry, we also will escrow not just 1 year or 2 years, we will escrow their life expectancy, which is, again, something that's been updated over the last few years just to make sure that we don't hurt the family.
That's interesting. Let's use some different ages. The minimum youngest that someone can qualify for a reverse mortgage is age 62, and then it has to be both spouses, correct?
Yes.
And let's say you have a $500,000 house, by way of example, and let's say there is no mortgage. What is the amount that can be taken out at that age through a reverse mortgage?
We're going to be right around the $250,000, $260,000 level at someone at age 62 in that level. I can just give you a quick example. I'm actually doing a lady in Detroit that's 92 years old, and her appraisal came in at $156,000, and her total loan that she qualified for was $105,000 because of her age. So we were able to give her a larger loan amount.
So in essence, it's like a sliding scale. The closest you are to a life expectancy, the more you can get. Would that be a fair statement?
Yes, that's definitely true. Right. It's kind of the opposite of, I guess, life insurance, possibly. But that's true.
It's interesting. With life insurance, the older you get, the more you have to pay for less. So
right. So one thing, this is obviously government approved, so there's definitely no discrimination on age or anything, really. So it's similar to the real estate business. There's no discrimination. One thing I didn't mention to you besides age, Henry, which is a main criteria, is the appraisal of the home. So again, we have to have an appraisal. In most cases, it is an FHA appraisal, but the main criteria is the age of the individual and also the appraisal on the home.
So there are closing costs, like with a regular mortgage, there are closing costs. There are costs for appraisals and other things. Would the closing costs be comparable for a reverse mortgage?
The pass-through closing costs are really identical to a regular mortgage, except, again, if we're using the FHA government mortgage, again, which is most of the mortgages that we do, there is an FHA charge of 2% that goes to the government that protects the homeowner and the bank, which makes this loan a non-recourse loan. Those are the main closing costs. So typically, if someone's making a mortgage payment, Henry, if we eliminate their mortgage payment and they don't have that, all those closing costs will be recouped by not making a mortgage payment after a short period of time.
So as long as someone is keeping, I guess, the house in good shape, is paying taxes, taking care of any other assessments, they don't have to pay back the reverse mortgage as long as they're alive. Would that be a true statement?
Right. Well, that's partial, but also if they leave the home as their primary residence. they have to pay it back within 12 months. In other words, if they decide to turn their house into an investment property and go buy another primary residence, that home that they're leaving would have to be paid off when they sell it. That's basically it. It has to always be their primary residence.
David, let's say someone moves to Florida and the primary residence has always been in Michigan. They take a reverse mortgage in order to, let's say, buy a condo in Florida. And for tax purposes, they want to stay in Florida, I think 6 months and 1 day. Does that mean the reverse mortgage would have to be paid off?
It's a good question. It has never come up. But again, as long as their primary residence is in Michigan where the mortgage is, it would be okay to do that. But I can't tell you for sure on that circumstance if the lender's going to actually know that they're doing that or not. But there is a yearly verification that comes out from the bank verifying that the homeowner is still living in that house in their primary residence. So
it kind of just came to my mind because a lot of people, the primary residence throughout their lifetime has been here in Michigan, but then for tax purposes, Florida, I do not believe, has a personal income tax, while Michigan does. So they have to be a resident of Florida for 6 months and 1 day. So just thought that crossed my mind.
Right. No, it probably wouldn't matter, but they can also just pay off their existing home in Michigan and take a reverse on their primary in Florida. They can also do that.
So that would be a way to get around that.
Right. And we didn't talk about purchases. I think we will later, but we can get into that.
Now, the demographics you already mentioned are 62 and over. What are the average age of most people you deal with who are taking out a reverse mortgage?
You know, it really varies. Many of them are in the early 60s, but I would say most of them are in the 70s. And not too many past 70. A lot of the people into the 80s and 90s have, I think, already possibly have moved. But again, I just told you I am doing a lady that is 90 and talking to an individual 86. But typically in the 70s, I think people realize that, you know what, I'd like to eliminate my mortgage payment, or I need more money to live on for financial stability. And also financial planners, where I get most of my business, I think they're starting to look at reverses as kind of an alternative to an annuity.
What are some of the positives that you find regarding a reverse mortgage?
Well, I think the number one positive thing is really just helping the financial stability of the homeowner and improving their either retirement or lifestyle every day, that they can eliminate their mortgage payment or give them just the ability. Henry, they don't have to take all the money at one time. We can just put it all in a line of credit. And when they need it, they can just draw on it, just like a HELOC loan from a bank. The difference is, though, of course, on a reverse, they never have to make that payment till they leave the home.
Now, David, your credit rating matters when you're taking out a conventional mortgage. How important is a credit rating if you're doing the reverse mortgage?
We do not use credit scores on what we call the HECM loan, which is a government loan. We do look at, as I mentioned before, the pay history on credit cards, mortgage payment, and property taxes. But credit scores are really not an issue. We do now go up what we call a non-proprietary reverse mortgage. We can go up to $3 million on a mortgage. And those mortgages, credit scores do matter. I think we need a minimum of 640, 650 on the non-government loans.
David, you mentioned that if a home is no longer the primary residence, then the loan has to be paid off within 1 year. What are some other triggering events as far as the payment on a reverse mortgage?
There's nothing. I mean, you can never really lose the house. I mean, the property taxes are the main thing that have to be paid, and of course the maintenance on the home. But there's no age requirement that you have to pay it off. Hopefully people live well over 100 years old.
Yeah. Is death a triggering event? Death of the owner?
Death of the last spouse would be a triggering event, yes. But again, then the heirs, or whatever, they're either a trust, and we can close in a trust, by the way. The house would go to the heirs, and then the heirs have a period of time to either refinance the house if they want to keep it, or just put up for sale and pay off the bank and retain the equity at that time.
And again, if someone decides to sell the house at any time, the reverse mortgage would have to be paid just as a conventional mortgage would have to be paid. That is correct, isn't it?
Yes.
So it really, I'm beginning to understand it more and more. It's like a conventional mortgage, only you don't have to make the monthly payments. And it's like a line of credit, so you can take the money if and when you need it, and it can be used for many purposes. It can be used to pay off debts, to pay off taxes. It can be used to help sustain a lifestyle, or it can be used for buying a second home.
Exactly. You can use it for helping your grandkids go to college, or taking that special trip, or if you want to buy a sports car or whatever you want to do, you can use the money for any reason. Henry, what I did not mention on one of the options on a reverse mortgage, you do not have to take all the cash at one time. And by the way, you can only take, if you do want all the cash, you can only take 60% of all the cash, the first at the main closing. You'd have to wait 12 months. After 12 months, you can take the remaining 40% if you want the additional cash. And this is really just a protection for the seniors, that they don't take all the money at closing and, a spoof goes away. The other thing is they cannot take any money at closing and just establish a line of credit that will grow every year. Today, the interest rate is about 3 3.75%, and that rate would actually grow every year, even though the house does not appreciate. So it really becomes an additional retirement tool.
Let's say the house does appreciate. I mean, we've been in a rising real estate market for many, many years. And does that mean you can take out more money over term, or would you have to do a refinance of the reverse mortgage? How would that work?
Once the loan is closed, it's closed just like a forward mortgage. So okay. 5 years, like you said, that people bought their house back in 2008 and 2009, it's obviously appreciated considerably. If they took out a reverse back then, it's possible the house is doubled in value. Yes, they would have to refinance, which we can do a refinance on a reverse. The closing costs are much cheaper on a refinance to reverse, but you can get additional money that way.
David, speaking of closing costs, what are the typical closing costs on a reverse mortgage?
Well, again, you have the FHA insurance if we're using the government loan. If it's a non-government loan, we actually have no closing costs. Everything is paid by the lender. But back to a HECM, which is the home equity conversion mortgage, which most of the ones we do, there's the title work, underwriting fee, appraisal cost, title closing fee. There might be well and septic if they don't have a fee for that. So just the basic closing costs, and then the FHA insurance fee. And then sometimes our commission is charged up front. Sometimes it is not.
David, what are some myths regarding reverse mortgages?
Oh, there's many of them, Henry. And that's one of the things that we're always been fighting about. Probably the most important one that everyone says is, well, I don't want to take that loan because the bank's going to take my house. That's the biggest misconception. The bank never takes the house. It's always the county that has been foreclosing on individuals, just like on a forward mortgage. If you don't pay the property taxes, after 2 years, they'll go into forfeiture, and the county will foreclose, but the banks will not take the house. The other misconception would be if both spouses do pass away, if there's any equity in the house, the bank takes the equity. That's a big misconception. Not true. Just like a forward mortgage, the house goes to the heirs and they have all the equity, whatever is available. The homeowner is never forced out of the house. The children can keep the house. I mean, I can just go on and on. There's no large out-of-pocket costs on a reverse mortgage. The only out-of-pocket cost when you apply for a mortgage and you're approved, and by the way, I never charge a client unless we approve them first, would be number one, they have to go to counseling, Henry, which is a certified counselor, a HUD counselor. In many cases, I use Oakland County Counseling because they do not charge. And it's a telephone call, and it takes about 45 minutes for the individuals to speak to a counselor. And at that point, they receive a counseling certificate. They can go to a company called Green Path, which does charge. There's many counselors. The other thing is once they're approved, they have to pay for the appraisal. The appraisal will vary between $450 to $550. And I do not order that appraisal any longer since the Great Recession. Only the banks order the appraisal. All the brokers are hands off now on appraisals. In some cases, if the underwriter looks at the appraisal and they think it's some questions on it, it's possible they might also order a second appraisal from another company just to make sure the value is correct.
Are there any downsides to a reverse mortgage from your perspective?
The only downsides, which I tell people that are refinancing on forward mortgages, don't take this loan out short term, unless on a reverse mortgage, if some people really need the money and to help their college, a good reason, it's worth paying the closing costs for. But if you think you're just going to take it out and then maybe you want to move to Florida in a couple years, I typically wouldn't do it because you might not recoup all your closing costs. But that's really the only downside, is taking out a loan that's maybe premature before you really decided this is the best thing to do. But if you need the money, it's never a bad thing.
What advice would you give to someone who is considering a reverse mortgage? And, before I finish that, I interject. You mentioned the counseling. Is the purpose of the counseling, first of all, to explain it, but it is also because we're dealing with people who are, gracefully graying or getting older, to make sure that they are of sound mind and fully cognizant of what they're doing?
Exactly. That's probably the most important, is the counselor will ask the homeowners questions to make sure it's right for them. But also, I send many of my prospective calls or clients that are not sure about a reverse. I'll send them to counseling, and so it gives them a comfort feeling, and so they can talk to a third party besides, the person who's originating the loan. So I like to tell them to talk to their financial planner, their children. It's important that the children really know what their parents are doing, I think. And one positive thing about a reverse mortgage, I know in my case, is the parents' age. Many of them do need money. They're going to run out of money. And if they don't have the ability to go to the bank and qualify for a new mortgage, and they certainly can't make payments because they might not have the financial ability, they may have to sell their house, or they're going to look at possibly the children to help them with either remodeling that house because of their aging, or for medical aid to help them in their aging. So reverse mortgages, again, could help the whole family, children and the parents.
David, tell us about some of the other financial services you offer. I know reverse mortgages are just a part of your portfolio. Tell our viewers about some of the other things you do.
Well, actually, right now we're doing a lot of refinancing just because rates have dropped so fast and so low. I just closed a loan with no points at 2.5% on a 30-year fixed the other day. So people have the ability to lower that mortgage payment, and they have the ability to buy more house than they thought they could buy. And in the real estate market, you probably know, is really moving very quickly because of people realizing it's a great time to buy a house because of the interest rates are so low. We do, of course, investment properties. People want to buy a house for just part of their retirement, to buy a home, to rent it out, or to buy it, fix it up, and flip it and make additional money, hopefully, for them. So we do everything. One thing that we do probably a little better than the banks, first of all, we close very fast. We can close a loan in 2 weeks, where it's difficult for the banks to close a loan that fast. And we have many different lenders that many of the banks don't have an option. They just have their own underwriting team. The other thing is self-employed people. Many self-employed people, as you know, to not take a lot of write-offs, and their bottom line, their adjusted gross income on their tax return is not sufficient to meet Fannie and Freddie qualifications on a bank loan. So we have non-qualified lenders. Most of them are Wall Street investors, companies that will lend just on bank statements, their corporate bank statement and their personal statement and their credit score. So it gives us really an ability to help people that in many cases are turned down from a bank.
So you provide a lot of options. We're down to about a half minute now. What are some final thoughts you would like to share with our viewers, David, before we sign off?
Well, one of the final thoughts, I guess, since we're talking about reverses, is if I have a client that has a lot of questions and they want to read up, you can go to our website. They can go to davidblattmortgage.com, but I can send them this book. And the most important thing on a reverse is using people that they can trust. I'm a member of the National Association of Reverse Lenders, which really we pride ourselves in ethics and really giving the client the best thing. But asking questions is probably the most important.
David, we're out of time. I want to thank you so much for being my guest on Gracefully Greying. I would like to thank our viewers for watching Gracefully Greying, and also say that you can view Gracefully Greying on our YouTube channel as well as on our website. Please like us, and you can also find us, of course, on the Bloomfield Township website. Last but not least, I have just co-written a book called Child Custody, A Complete Guide for Parents, that has just been published, aimed at all of those who have children or grandchildren. Again, thank you for being my guest, and thank you for watching.